Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol, USO. Today we are up 12 basis points. On the 1-hour chart, we had the 10:30 EIA inventory report and it was a positive one. We head up higher. As for the 4-hour chart, we approached near overbought RSI, and if we expand out to the daily chart, we start to break higher highs and higher lows, and we have not reached overbought RSI, so we still have more room to go. And as for resistance, we still have this resistance that dated back to September 16th. This is our next possible resistance, and that price also coincides with past support since we're below the support level that act as resistance, and that is around the price of $12.83. So that is our next resistance. As for support, I do see us reverting back to the mean and hitting around the support. I would say by the time the 18-day moving average, this purple line, reaches, it should hit the $12.33 support. Reason why, we have a price concentration that dated back from December 5th all the way to December 12th, and by the time the 18-day moving average reaches that act as our next support. So if we were to move up higher, that price movement is roughly around 72 or 77 basis points to the upside. However, if we do reverse and head down lower, that price movement is around 3.1% to the downside. So the forecast model is now available in the link below, so do check it out for WTI crude oil. If you configure the settings, you'll see all the models that we do not go over with in the video, so do check that out. So back to the forecast model, I'll go day by day where WTI crude oil will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So we have all of these models, and which one of these models we should focus on. Ideally, the model that is the best match to the current trend. We have the current trend right here, and below is the trend that I believe is the best match. This trend dates back to August 7th to this October 31st, 2017. So let me point out why these two charts are similar. So what we have in the beginning of the current trend, we start off at the middle Bollinger Band, and then we proceeded to drift lower and touch the bottom Bollinger Band. After touching the bottom Bollinger Band, we managed to reverse and average above the middle Bollinger Band for several days. So we have that point there. So next, we drifted a little bit lower below the middle Bollinger Band. However, we continue to make higher highs and touch the upper Bollinger Band once more. So we have those points there, and in the trend below, we start to see a similar pattern as well. We start off at the middle Bollinger Band, and then we proceeded to drift lower to touch the bottom Bollinger Band. Next, after that, we average above the middle Bollinger Band for several days, and then let's make this the same color. And then after that, we drifted a little bit lower below the middle Bollinger Band. Next, we see it revert and head on higher highs right towards the end. Similar to the trend that we saw on the current trend. So what we have is 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's reason to believe if the trend and patterns are the same, the outcome and forecast should be fairly the same. So the model that we just examined was August 7th to October 31st, 2017. Back then, WTI crude oil continued to move up higher around 4.7 or 4.68. So let's check the day-by-day probability of where WTI crude oil will head to the next coming days. So what we have here, we have the probability on first day or tomorrow. We concentrate between lower 2% and upper 2%. And as the day progresses, we see more favor of hitting between 2 to 5%, and on the extreme case, between 5% and 8%. So there's more favor in oil heading higher rather than heading lower. We don't see the extreme cases on this standard deviation. So I do see that as a possibility that oil would head up higher in the next coming days. So after all of these models, I found that the 2017 model is the best match, and it overlaps the current trend neatly. So again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.